Hi, I'm Josh Brown. I'm here as always with Michael Batnick. Today we're going to play What Are Your Thoughts? Mike doesn't know what I'm going to ask him, and I don't know what he's going to ask me. Stick around. Let's see what's going on. Okay, you go first.
So Jordan Belfort was barred from the industry about 20 years ago.
Yes.
Could you believe that this shit still exists? So news came out last week, Newsday reported that there are firms on Long Island still doing pump and dump, grilled cheese truck Inc., whatever. Like, can you believe that this still exists?
I can believe it, and why wouldn't it still exist? Nobody wants to shut the whole thing down. They want to go after person by person or firm by firm, rather than just saying, from now on, there is no more predatory telemarketing for any securities of any kind.
Well, but I guess I mean it in the sense that how do people still fall for this nonsense?
You know, when I was on Long Island in brokerage firms, there were good firms, there were bad firms, but what both had in common was they were not calling people in New York City, in Miami, in Los Angeles, in Chicago. They were calling like very unsophisticated people who were very disconnected from the markets. They were calling like people who were running commercial farms, and they would like prey on just people that don't know anything. And that's how it works, and it still works this day. And it's got to be even harder because there's no more landlines.
Harder for who?
For like a cold calling scam artist broker, because people don't even answer their phones anymore.
Yeah, so maybe it takes 1,000 calls instead of 500 to get a few leads. But I just mean in the age of the internet, when all this stuff is available, and The Wolf of Wall Street was a big movie, like.
The other thing is that it's not all on the broker. The person answering that call wants to believe. If they didn't want to believe, then they wouldn't stay on the phone. But they do want to believe that somebody is calling to offer them something for nothing. Like, I'm not saying that excuses it. I wrote a whole book about this, but, well, I know it. So it's not that it's equal blame, but maybe 10% of the blame is on the person thinking that somebody from Staten Island or New Jersey is calling them from thousands of miles away.
Well, you could say,
to give them a gift.
You could say 50% of the blame is on them, but that's not really fair.
Well, I'm not saying 50%. I'm saying 90% of the blame is on an aggressive young man from Long Island or from New Jersey, and 10% of the blame is on the person who believes there's a such thing as reward without risk.
What do you got?
That's my spiel. I wanted to ask you just about the markets in general. The Nasdaq this week broke 8,000 for the first time ever, and that's after taking out the all-time Nasdaq high of 5,300 in March of 2015. And then today, the S&P 500 broke 2,900. When do we get nervous? 50 more points?
Always nervous.
Always nervous.
So that's what I was going to ask you about the stock market. That's my next question, but I guess I'll take it. So in February, I guess on January 26th, we made an all-time high.
Yep.
And then in 9 days, we fell 10%.
Yep.
Which had never happened before, where you make an all-time high and then 9 days later.
Is that true?
9 days later, you're down 10%. Yeah, that's true. So I don't know. I mean, am I surprised? Like, I don't have like thoughts on. Am I surprised? No. Am I nervous? Always.
Well, I guess what I wanted to ask you about that is that the internals look really good as we're printing these record highs, almost all of them, and more than that, sector strength seems to be pretty widespread. So I mean, I've been saying this on television for the last couple of weeks, but you have healthcare stocks breaking out, rallying, making new highs. You have
discretionary tech, financials are finally moving out.
So, like, isn't this the condition in which you would want to see market internals when you're making these new highs?
Yeah, things look good.
So I was around in 2007. I was around in 2000. I remember the narrowness of those rallies. And in 2007...
Show me a timestamp.
In October 2007, I actually remember having a conversation with my friend J.C. Peretz. We were working at a brokerage together, and I actually said to him, there were like 6 stocks still going up, and if you don't own them, you might as well not even come to work. That statement, making that statement, was very prescient, although I was an idiot at the time, I didn't know it. But we're witnessing the opposite right now.
Yeah, I mean, I guess the counter argument, and not this is a counter, but you would think that things will look best before they start to look a lot worse.
Okay, that's a great point. So I actually looked at RSI of the market on January 26th when we topped the last time. It was way overbought. It was like 80 something.
But that's a good thing.
Right, we're not there. And then I looked at percentage of stocks above the 200-day. It was like 80% of stocks. We're not there yet. So to that point, things don't look as good as they could look. It's just that they look pretty good.
Yeah.
So, all right, you're next.
Okay. Do you remember the day that Amazon announced that they were buying Whole Foods?
Yes.
What happened to retail stocks, Costco in particular?
Well, anything that
certainly in the grocery space.
Well, I remember that Amazon went up enough and gained enough market cap to pay for the deal, which is great. But then I remember everything supermarket related got killed, including Costco, including all the groceries.
By the way, you know that its stock going up does not pay for it. It was a joke, right?
No, it gained enough market cap. Well, listen, in the old days, when you announced a massive acquisition, your stock went down. That's why the arbitrageur strategy even exists, and that doesn't happen anymore.
All right, well, whatever. But so Costco is at an all-time high now. Right. TJ Maxx is at an all-time high. Target is at an all-time high. Yeah. Kohl's all-time high. Best Buy. Right. So how is Amazon destroying all of these companies yet all of their stocks are at an all-time high?
I have a theory about this. It's not that brilliant. It's two things. The first is there's a cyclical thing that's going on with all these retailers that you just mentioned.
Like what?
The economy is fucking incredible right now.
Right.
The consumer economy specifically.
So Target CEO just said it's the best consumer environment ever. Same-store sales at Target were up 13%.
So he probably knows what he's talking about, the CEO of Target. So I would say that is the case for all of these companies, which is not secular. It's cyclical. It's just an amazing... So in other words, when there's a downturn, I don't think that these retailers buck the trend in the same way that Amazon potentially could, because on a secular basis, you could also argue Amazon forced them to become better at omnichannel, do a better job online with the app, with loyalty programs. But I don't know that what we're witnessing now is this secular comeback for brick and mortar retailing. I just think it's an amazing economy for consumer spending. So anyway, that's my shtick on that. I wanted to ask you about Michael Kitcey's blog post that you asked me to read. I would have read it anyway. Shout to Michael. But he did this thing about how the RIA industry, registered investment advisor industry, is barbelling, and the big firms like that are 10 billion plus seem to be getting bigger at a more rapid rate than the small firms. And the evidence of that, by the way, 3.8% of all of the RIA firms out of 18,000 firms manage 60% of the industry's assets under management. And there are 687 firms that are $1 billion or more. But then he's making the case that solo practitioners are doing better than ever. And they're not getting killed by these larger firms. And actually, they're taking home as much money at the end of the day. They're as profitable as the larger firms are. Is this just going to continue, or will there be that consolidation at the lower end that we've been hearing about for years? Like, what's your best guess at how that all shakes out?
I think I disagree with you here. I don't think that the solo advisor managing $40-50 million needs to consolidate.
Needs to?
Yeah, I don't think so.
You don't think so?
No, I don't think so.
Okay, I do.
Okay, why?
Because I'm the CEO of the firm. I can tell you that our compliance costs go up every year. Technology costs go up every year. And if you're an advisor trying to compete with, forget about $20 billion firms, just trying to compete with what we're offering clients, not just in technology, but in actual service, I don't think you can right now. So in 3 years, I know you won't be able to. But go on.
I just disagree.
What is the other side of that? Are clients going to be okay with getting less service, less technology?
I don't think they have to. I don't think that they have to. So it's going to be maybe harder for the solo advisor. But let's say that you have 30 households, you're managing $40-50 million. What's wrong with that? Why do you need to merge with somebody else?
I don't think that anything's wrong with that, other than the cost of, quote, managing those households.
So their margins get squeezed a little bit.
Right.
But I think they're going to be fine. I think that firms that have, say, four or five employees with like $120 million, they're going to need to do something.
All right. So I would agree with that. Like, it's probably worse to be in the middle than a small lifestyle practice.
And Michael spoke about this. The middle is a huge range.
You know, the other component of that is, are you a 65-year-old advisor that's running out the clock in the last 10 years?
Right.
Or are you 35? If you're 35, then you don't think you're going to stay at 40 million.
Right.
And you probably won't.
Right. Or maybe you will, and your life is fine.
Right. If you're 65, it's like, look, my clients are 85. This is.
But if you're 35 and you're managing $40 million, that's a nice, comfortable living, and it's not too much stress in terms of depending on how many families you have. Anyway, let's move on.
Okay.
All right. So congratulations to you for producing the single worst take ever.
I think we're about out of time, folks.
No.
Okay,
if there's a top three, this is a quote. If there's a top three QB or the number one kicker still available by your third pick, do it. Now,
whatever. Draft is tonight.
Were you joking?
No.
Do you take it back?
No.
You are incapable of admitting that you were gravely mistaken.
No. I did it last year. It worked. Therefore, it must always work.
Oh, my goodness.
I'm suffering from the availability bias and the recency bias.
First of all, why would there be a top...
I grabbed Russell Wilson as my third pick. People, I was at...
doesn't mean anything.
I was at the Green Turtle. People were throwing pretzels at me. You know
that
what?
doesn't refute the ridiculousness of your statement.
More points.
Why?
All of the running backs I
doesn't matter. Why would a top three QB be available in the third round?
Because people disagree with my approach.
They wouldn't be.
And
why would you take a kicker?
Oh, I took a kicker in the 5th round.
Because
he's the best kicker
because
in the
they
NFL.
score a lot of points. The variance is nothing. They all score a lot of points.
You know
Terrible
what,
take. Terrible take. Let's move on.
You have what pick tonight for the Ritholtz 12th?
9th.
I have the 10th. Don't take. I'm not going to tell you who I want. All right. I actually wanted to, let's stick with football because Odell Beckham Jr. signed a 5-year deal yesterday. We all knew that they would do this. I agree that they had to do it. He's going to make $95 million. $65 million is guaranteed. But let's assume he's going to get all of it or most of it. He's going to make like $18 to $20 million a year is how it works out. And that's not the point. The point is I just find it interesting the difference between sports and superstars from one sport to another. There are 45 players in the NBA that are making more than Odell Beckham a year. And obviously Steph Curry should be making twice as much, and he is. Jimmy Butler makes the same amount as Odell Beckham a year.
Okay.
Serge Ibaka.
What's the point?
Victor Oladipo. Gallinari. I just find it interesting that you could have a mega superstar in football, but because there's so many players, he's not paid the same way a middling star, let's call it, in the NBA.
Well, I think the reason why they're not compensated equally is because it's injury. Their careers are so much shorter and more fragile.
There's a bigger risk to paying Odell than there is to paying Serge Ibaka.
Yeah, you're not gonna lock up an NFL player for more than a couple of years.
Right. So you're not gonna have a 15-year career, or you're not gonna expect that.
No. So I obviously I hope it works out.
But you agree they had.
They had no choice. They had no choice. He's the best receiver in the league, or top 3. They had no choice.
Now nobody's picking him though in fantasy in their top 3.
Wide receivers?
Yeah, none of the top fantasy guys are picking him in their top 3. No, not wide receivers, players overall.
Oh no, he's not going to go top 3. He's definitely top 3 wide receiver in fantasy.
You think he goes in the top 10 of our league?
Our league's a joke, but
such a hater.
He is whatever. He's definitely top 3 receiver in fantasy.
But everyone's going to go for running backs this year.
You have to. There's just far fewer of them. Okay. So there have been people that have been bearish for a long, long time.
Fired.
And it's hard at this point. It's really hard to take them seriously, even if their arguments, which have been changing and morphing and blaming whatever, has shifted.
What's the argument this week? It's always different.
Okay, fair. But what if, and I guess the most basic argument is valuation and Fed, whatever, keeping rates low.
Okay.
So it's been easy to brush it off given what has transpired. But what if they're right? And of course they've been early and whatever, which is...
Well, you can't, statistically, you cannot be right. If you've been saying top for 5 years...
Fine, forget about that.
There's literally no chance for them to be right anymore.
So forget about those people.
Okay.
But what if...
New bears?
Yeah, new bears, fine.
So I go bearish today.
Yeah.
Okay, got it.
I'm just wondering are we being dismissive of bearish arguments because these people have been so ridiculous?
No. I reject this. Let's compartmentalize. These people are ridiculous. I saw an economist the other day using technical analysis to back something that...
Wait, on stocks or on economic indicators?
Whatever. Just somebody that has no idea what they're talking about. They're ridiculous people, and there's no way they could be right. The market could drop 30% starting today and wipe out trillions of dollars. They will still be wrong because of how long they've been saying the same thing.
Fine, so they cannot be validated.
A new bear can be dismissed on this basis. I'll give it to you. A new bear can be dismissed. Somebody, even me, I come out today and say, you know what? My gut tells me we're in trouble, but because the reasons that the new bear would give are reasons that have already been in force for years and years and years, and the thing that slams the brakes on this market and reverses it will not be any of the things that someone would be saying right now.
Well, what if...
Valuation doesn't stop the market?
What if stocks fall 65% and the PE goes down to 11?
Okay, but the PE is not what stopped the market from going up. Has a PE ever topped the market? How about this? You were looking at cyclically adjusted PE ratios. 5 years ago in 2013, somebody could have very reasonably remarked that stocks are selling at a cyclically adjusted PE, CAPE ratio, that is in the 87th percentile, which you did a post.
Are you quoting me?
Yes. And so you would have said, does it make sense to buy stocks when they're selling at a valuation that's almost in the 90th percentile of all time? And then the stock market doubled. And I think the Nasdaq tripled or even more. So the PE is not going to be the reason why the market stops and reverses.
No, I know. I guess my broad point was, are we being too dismissive?
Listen to me. I hope that we have that 20% bear market. I know that our clients will be fine because we will be relentless at making sure that they're fine, and we will work overtime to make sure that not only are they okay with the drawdown, but that they're adding to their exposure in terms of rebalance, etc. And then I hope these other people have that celebration that they've been waiting to have. But at the end of the day, none of what they're saying is going to help any investor. Because when we're down 20, that's when these assholes start talking about we're going to be down 50.
Right.
We're going to be down 90. You remember the
down
1,000 calls?
We might be down 110.
We're going to be down 110% from the high. But that so they will not help. Even if a new bear comes and nails the timing, right? With all new arguments that we've never heard before, they will still, at the bottom of whatever bear market is to come, they will still be the people out there saying, oh no, it's going to get twice as bad.
And you will still have
had it feels that way.
And you will still have had the worst take in fantasy football history.
Nah, all right, maybe. We'll see what happens. All right, thanks for joining us. That's it. If you have any take on any of the things that we talked about today that you want to share, hit us in the comments. We'll see you next time.
Email Josh directly.